Guys, my name's Adrian Floate. I'm the Managing Director and CEO of Spenda, also one of its founders for my sins. Spenda is a technology business. We're a solution provider, and we certainly encapsulate everything that is about next generation payment and lending. We've got a fantastic team, and we have an application which is relevant to any organisation that needs to make or take a payment. And obviously our focus is around rolling out our platform through our node spoke strategy and monetizing the payment events that are attached to invoices and transactions that we either originate within our software solutions or alternatively integrate into our platform. And I'll unpack that a little bit more for you in a moment. Next, please. So to give you a sense of it, I suppose, let's just talk to our maybe our competitive advantage and try and understand that a little bit. So we're not a software company, we're not a payments company, we're not a lending company in the classic sense of any of the above. And the reason being is that our core and our foundation is our ability to collaborate. So everything that we do is about enabling a community to transact more efficiently. And that's not something you can get from a bank, and it's not something you can get from a payments processor, because we do all the things that happen foundationally up to the point when those things need to occur. I suppose moreover than that, our secret sauce exists in the way that we operate our intercompany transactional services. And what that means is that I as a company am able to send an invoice or a purchase order or other such transactions in an electronic format that can move from my business to my trading partner's business, and most importantly, enable integration at each end. So by default, we're removing administrative burden right across a value chain. That then stems into our breadth of capability. Our breadth of capability is not any one thing, which is very unusual in the Australian market. We're not a one-trick pony. We don't just have a capability. What we have is a broad cross-section of core software applications that allow us to create a recipe of solution that lets us move up and down a value chain. And when I talk to our node spoke strategy, what really is important for our both present shareholders as well as potential shareholders to understand is the viral nature of our platform. By its very behaviour, our software invites a community to both board and participate in that collaboration, that integration, and that monetization of those transactions via payment services and lending. Next, please. Obviously, this quarter we've just come off has been a great quarter in terms of acceleration in our growth, but it had so many more key elements for us as an organisation. It's a quarter that we took significant steps forward with all of our key strategic drivers, whether they be our relationship with Carpet Court, our relationship with Capricorn, our scaling of our lending services, the execution of our PayFac services, our expansion in terms of international settlement rails and other such things. There's no question that our cash receipts from customers result was a great one, but from our perspective, very much the starting point, very much a place that we probably thought we'd be a little sooner, but we're very happy to have got there. In any organisation, it's obviously difficult to deliver constant growth, but the numbers we're starting to put up now, the customer flow that we're getting, we're extremely confident of the future that lays before us and the referenceability that some of these key projects have given us that are allowing us to roll into the next project and the next project. Next. So I just want to talk a little bit more about that node spoke strategy. So what we're at its core, our software solution is really an enabler for disparate businesses to trade more efficiently. And really what that means is that rather than, if you like, an invoice process being I send you an invoice and it's sent by email with a PDF attachment, that PDF attachment's picked up at the other end and then typed into another system. And then when a payment then occurs, exactly the same process happens in reverse, except for instead of an invoice, it's a remittance advice. Our software is about creating and digitizing those communities where a node, as an example, being Carpet Court. Would you mind just animating the slide for me? That first part of our engagement and our scaling point is the ability for us to board that node. And that node, if you like, is a classic aggregator. They aggregate demand from the buy side and they aggregate supply, obviously, through their supply chain. Carpet Court or a franchisor is such an aggregator in the same way that Capricorn is such an aggregator. Now, what our model allows us to do is, through an implementation phase, roll out what we see as being plumbing. So in the case of Carpet Court, we announced that around Christmas time of last year. We really scaled that program through the last 6 months, and we've built that network. Through that process, we've earned good revenue, without a doubt, but more importantly, we've added business value to the network. We've got exceptionally good scores from customer feedback, 90+% customer satisfaction. What that is allowing us to do now is scale that program. And what I believe we're about to demonstrate to the market is when we roll out this sort of network, the first 6 months are building the pipes, creating the trust, understanding the flows, seeing the friction points in that value chain. And when we've done that, month 7 on is all about scale. And we believe that that's going to unpack a 10x revenue profile out of any one of those nodes, purely because of our breadth of capability. And ultimately, what we're now doing with Carpet Court and with other customer channels is connecting that first instance being the store to head office flow, solving that problem of administration, invoice delivery, invoice non-delivery, invoice payment, automated reconciliation, credit claiming, credit note management. That problem addresses core administration at both at a corporate level as well as at a store level. We've got small business owners that in and of themselves have a personal investment in time in completing some of these tasks. Now what we're doing that is moving that out to the consumer end, expanding our lending layers and monetizing more and more of that flow. So it's an exciting time for us. If you can click for me. What we can actually see now is we've gone through processing our first 100 million, which is a major milestone from I'll call it a scheme perspective, a payment processor perspective, an understanding of capacity. So it's something we're really proud of, but it's something that we know is only the tip of the iceberg. We absolutely have articulated that, again, with our node spoke strategy, what we would typically see with a competitor in, let's say, the B2C consumer payment space, they'll go out and they'll try and grab some land with a network like Carpet Court. And that network, they might get 5-8% of those 200 plus stores. We also know that when we look at the payment flow between a store and the corporate entity, we largely had EFTs, but we had no value add around that, no automation in any aspect of that flow, such that we had reconciliation issues, late payment, invoice missing, all of the core problems that relate to business. And what we're very proudly now able to say to our customers and people that are engaging with us on the back of some of these successes is, can you get that from your bank? And very quickly you get no. Of course not. That's not what banks do. So we're able to cannibalize flow that has traditionally existed by value adding to the solution and delivering more than anybody else has really contemplated, and certainly de-risks the technical delivery of these sorts of projects, where if you think about it, you probably need 5 software vendors and all of your various banks to provide a similar service to us plus a lender. We're everything in one, and we're about to demonstrate why that recipe works. Next. So if you look at the range of our applications, we've got a bunch of staff that has critical deliverability. So accounts receivable and accounts payable are fundamentals in every business. The difference between us and what you see from others is ours is collaborative. Ours addresses invoice delivery. Ours addresses credit management. Ours addresses credit claiming, payment arrangements, all those sorts of things, but in a bi-directional fashion. So that the keystrokes of the person creating the transaction impact the party receiving the transaction. And we take that right across the board, whether it's the way that we're now constructing an SOE program with Carpet Corp, where we take our point of sale capability, our purchasing capability, our service management capability, our sales order management capability. We take that recipe of functional outcomes, workflow, deliverables to that business, and we make a new, if you like, instance for that network of stores that's highly repeatable, but most importantly, makes those businesses easier to sell, easier to manage, and easier for a corporate head office to support. So again, how do we then win beyond the software? Well, we add payment flow services, we use our pay invoice by link, and we sell terminals under our payback agreement with Fiserv. All of these things build an ability for us to charge a fee on the payment flow, whether it be originated through our warehouse structure or via a card payment. Next, please. When we look at layering the revenue, and I've sort of started to talk to this, if you can just animate that for me. As I said before, all of our hunting is in the middle. All of our competitors clip around the edges, so they only ever get little parts of the entire market. We have 100% saturation in the Carpet Corp network, and we are delivering that mentality to other networks now. That allows us to derive a SaaS income, managing the various experiences and the workflows that relate to processing payments and credit claims, etc., as well as the last mile integration, which ensures that transactions make it to the ledger in both directions. So we're saving that time, energy, and efficiency. And obviously then that's that monetization through the payment flow event. But then we fan out, we move upstream, up the value chain. So if you can click for me again and animate. And in that case there, that consumer payment piece is allowing us to just do more and change the consumer experience, standardize it, as well as, again, monetize the flow, but more importantly, on an aggregated basis, save the stores money. Because again, we can aggregate volume, we can get network cut through, we can effectively displace current competitors, but by bundling a complex set of capabilities and delivering it as if you like, a box solution on a repeatable basis. Next. I guess the final part of that comes when we engage downstream into the supply chain, we roll out things like our marketplace capability, and we allow aggregated demand if you like, at the head office level to shape the way that supply occurs. Now, you say to yourself, why would you want to do that? Well, it's very simple. As a business, without the ability to aggregate in the manner that I've just described, what that means is if the supplier or manufacturer of goods rolls out e-commerce and says, I want digital transactions because they're better, they're cheaper, they're faster, they're easier for me to manage. The problem is if you've got 80, 100, 2,000 suppliers in a network, every one of those e-commerce instances requires signing and process alignment within each one of those small businesses, which essentially means they're unadoptable. So our platform is about embracing and galvanizing together those flows with standardized sets of behaviors that mean that you can teach the kid on a Saturday that checks your stock levels to place orders that then just need approval, and you can deliver your supply chain a digital order in much higher percentages. Next, please. I think I'm right at the end. So as I suppose we've made public, we've had a number of markets which we've lit up. We've certainly had success in what we would see as a retail aggregation play or franchise, automotive beyond Capricorn, but we're delighted to be working with Capricorn, agriculture and hospitality, and more of that behaviour that we're unpacking will become clearer to the market, both in terms of the numbers that we put up, as well as the customers that we talk about more formally in whether it be on the ASX or in case study format as we share the journey and the way that we've shaped those organisations. Next. In terms of where we're at right now, short-term focus for us, it's all about scaling that Carpet Corp network, growing our payments flow, loading in another 2 critical aggregators into our network programs into production, so they're revenue generating via payment flow. we've now at the point where we've completed that first phase of that Capricorn DSD, and we're moving into that finalisation of that licensing piece, which is a very exciting thing for us. There's nothing better than renewing a contract after a long period of time, and we absolutely love working with Capricorn, and they've certainly embraced our team in, if you like, a much more contemporary manner. And then finally, obviously, is leveraging our payback services to grow our consumer payment flows. They're absolutely what we're focused on in this current quarter, and we're very confident of delivering on all of them. I think that's about me, mate.
Thanks, Adrian. Well, you've broken the record with the amount of questions that have come through in the last 10 minutes. I'll try and answer as many as I can, but please, if you can stay on afterwards and answer some of those online that you can see, that would be much appreciated. So Let's kick off. The company recently announced the completion of the Spenda platform store rollout across the entire Carpet Court business. How important was this? What does this mean for revenues, and what does this mean for revenues going forward?
Well, I suppose if I just talk to what we've announced, it was obviously incredibly important. When you're doing something that's innovative and new, it's hard not only to get people inside the tent to understand, but also outside the tent. So, in 2021, 2022, when we went looking for referenceability, we had to rely on things that we'd done in the past, like Capricorn, to demonstrate that, hey, we know how to roll out a solution. But the trust that's been created with Carpet Court now is hard to measure and be tangible around. When it comes to revenue, as I said, we would expect a 10x outcome on what we've achieved in the previous financial year. That 10x outcome, I think we've talked to, $30,000 a store and the revenue composition. I don't think that's very hard for us to achieve. As I say, we've already got 100% saturation of one segment, and we're setting about doing the same in other segments. So incredibly important, and we're incredibly appreciative. And you'd be surprised at how many organisations in unrelated industries trust the Carpet Court brand, have an experience with it on a personal level, and that's been incredibly valuable for us to be able to then get that next customer, that next customer, that next customer.
Yeah, got you. And as part of the Carpet Court rollout, you also announced the signing of an exclusive five-year agreement to offer lending services to the Carpet Court network. What are the potential revenue implications from this?
Oh, look, simplistically, facility limits we're expecting to be between sort of 1 and 300. We're right at the coalface now of that program rolling out and scaling. We've had some major milestones this week in terms of the way our warehouse has been composed, which is really exciting for us as an organisation. And in terms of revenue, simplistically speaking, we'd expect to earn somewhere order of magnitude $15,000 to $25,000 per store per annum, just out of that revenue line. Really, it comes back to limit. So, when we announced that 30 grand, we were taking a very conservative approach on the smallest store rather than looking at what it would look like with a store with, multiple lanes, more installers, etc. And as you would expect in any business, there's a range.
Got you. You touched on this already, but I think it's worth asking. The company also announced an extension to its existing relationship with Capricorn Society. What does this mean for Spenda going forward? And can Capricorn be converted to a Carpet Court style deal in time? How big could it be?
How big could it be? Oh, look, Capricorn's very personal to me. I spent a significant amount of my life on the road visiting mechanic shops with and suppliers to Capricorn a long time ago now, and got a great deal of learning and understanding. I have a really good understanding of automotive as a general principle, but if you step that back away from me, of course we want to do a very similar implementation to Carpet Court. And I think the important thing to understand is that the DSD initiative has, when we talk about software licensing, we're talking about our pay statement by link product, the same thing that Carpet Court's using. And again, the market has not, and I don't mean the customer, the market hasn't understood what it means to be able to localize an implementation into a major corporate. Separate to that, the other thing that's done for us is credibility. And I don't mean credibility again from an investor space, but when you've got a business that's doing plus 3 billion and you start to talk to how you're going to manage their flows and what you do for them today, that's bank grade. That's changed the entire narrative with our issuer strategy and the way that we're partnering more broadly. So the short answer is yes, transforming a big machine like Capricorn will take time. But of course, that's absolutely been our strategy. And unfortunately, COVID disrupted some of that. We had started some of these programs that just got killed when, Victoria and New South Wales went into long-term lockdowns. There's not a lot you could do from a deliverability perspective, but that is what it is.
Yeah, I got you. And just wanted to finish up here, Adrian. How does the current pipeline of potential customers' deals look? What are you what are your expectations over the next 12 months?
Well, I had a budget meeting this morning, which during the budget meeting, things were changing quite aggressively in the sense that we've now got customers pressing us, for documentation. Can we get this deal done? We want to get moving. And the reason being is, again, I come back to you can't get it from your bank. You can't get it from a small business point of sale software vendor. You can't get it from your ERP vendor. It's very hard to find someone that can actually compete with us pound for pound on a solution. So we're starting to completely change the way we talk to the customer. We don't talk about lending products anymore. We don't talk about payments. We focus on what are you trying to achieve? How can we align to your vision? What is the recipe that will make it work for you? And then let's get on with the show. So the short answer is, do I think we're going to knock over that articulated goal of 2 deals? Yeah, I do. Do I think that some of the negativity around our slowness will change? Absolutely. The only reason things will change is by us delivering differently, and I believe we're doing that. And I'm delighted to show people what we've been working on, because I think the value in our team is something that I talk to them often about being proud of, and I think that it turns into dollars pretty efficiently as we start rolling some of these programs out and making them public.